Good morning. Welcome to the trade setup right here on BloombergQuint Live. I'm Niyat Shah, and not too many cues, no cues to the U.S. markets. They were shut for Martin Luther Day, but the 10-year yields in the U.S. keep on surging up, and that is well, a bit of a worry for markets at large. Not that the Asian markets is showing that, but if you just look at the 10-year yield, the last 10 days movement, you will see that about 1.82 or thereabouts. It's not something that the markets would take to very kindly. So that's a small bother, if you will, for the markets at large. But Asia today, at least Nikkei had started off reasonably okay for itself. So no big gyrations in Nikkei at least. We should get the other Asian screen up in a moment from now, and it will show you what the rest of the Asian pack is doing and what's to be anticipated, if you will, for our markets. So this is what the rest of Asia is up to. Flattish to marginally positive. Like I said, Nikkei is probably the only one which has got a good sound move upwards. The rest of the pack is flattish to marginally positive. The SGX Nifty next on our screens, and some expectations of what we will do. Remember, the uptrend is the trend is looking okay. The trend is not looking all that bad. We'll start off about flattish in the session. And why do I say that the trend is looking okay? Is because while the Nifty may be range bound, the broader market activity is alive and kicking. To be honest, even Nifty's range bound, yes, but it's not too bad, if you will, right, on the Nifty performance. But the MOV function, again, yet another day of positive market breadth. 5 of the 6 last sessions have had some pretty strong market breadth, and that is to be taken constructively, viewers. So this is good news. And in yesterday's session too, while there was a bunch of very iffy stocks, I mean, look at the top 4 or 5 or 6 names, and you won't be able to predict what some of these will do in terms of earnings, right? Alok or a Rajesh or a MMTC, even Adani Green, you can't predict despite its market cap. So that was the tough part. But a lot of news-based stocks, the likes of Praj Industries, which won that large order, or real estate led by Soba, or Greaves Cotton, which is in that EV space, the news-based names did very well. The two-wheeler majors did really well. So that was actually a really good part about trade yesterday. Now, the trade setup, according to me, I think I would presume that range bound activity would be seen at the large cap end of the market, Nifty in particular. But risk reward, at least for today, may not be necessarily in favor of leverage longs on the Nifty per se. But specific stocks, as is usually the case, I'm not saying anything new, continue to be in focus. So commodity chemicals and mid-cap metal stocks could likely be under pressure today on account of the earnings. And I think people will take notice of the fact that Tattva Chintan has done what it has done. And I'll get to that in a moment. But watch out for commodity chemical names. Spec chem may be different, but commodity chemical names could be interesting because the markets will extrapolate about the kind of margin pressures that some of the others could see. Real estate and ethanol-based stocks are seeing buying at every decline. I speak to local brokers, local dealers, and all of them say that clients are very keen to buy into those names. We saw that happening with DLF yesterday, for example, and some of the others too. Prestige, the pre-sales numbers are superb, and therefore you might well continue to see real estate have some traction. I think what is also starting to happen, viewers, and something that everybody should be cautious of when they are trading on their own on those stocks, is that the market is starting to build up expectations with regards to key sectors where the finance minister can deliver. Now, rumors about what will happen to fertilizer, subsidy, so on and so forth, etc., started coming. I urge all of you to do one simple thing. Look at the 20-day price performance of some of these budget-related beneficiaries, railways, fertilizers, etc. The last many years, 10 days before budget, 10 days after budget, you will get your idea of whether you should trade some of these or no. Please do that exercise. It's your hard-earned money. You need to do justice to yourself. So please be careful before you fall for any of these stories. I'm not saying fall in the wrong way. I mean, every reporter or somebody does this story to the best of his or her abilities based on what their resources or sources have told them. But don't trade on the back of WhatsApp rumors coming on your screen and you believing that, oh, something will happen in fertilizers or this or that. Just be a bit wary of that. That's my limited point here. Really, not trying to be preachy. By the way, watch out for oil prices. They are flaring higher. There's some Middle Eastern tension as well. UAE and Yemen and Houthi rebels, etc. You got to be careful of what's happening out there and impact it could have on Indian markets. but also it could the impact it could have on upstream oil companies. So watch out for the ONGCs and the likes. Flows, FI sold about 855 crores, DI is bought about 115 crores. And among stocks in the FNO band, Granules enters the FNO band space. Remember that stock was down and out in the session yesterday. At a point of time was down about 10%, ended about 7.5% lower, now in the FNO band. So watch out for that, and watch out for some of the others like Sale and Escorts as well in the session. Sale in particular, considering how mid-cap steel could have a slightly iffy day. Sale is not mid-cap-ish, but I'm just saying. Some results, key results today to watch include a Bajaj Finance, and watch out for the asset quality numbers there. If they spring a surprise, you never know, the expensive stock could become even more expensive. But then others, after Angel Broking stupendous show, all eyes on ISEC, usually doesn't tend to do as well as Angel on the delivery front, but watch out for ISEC, watch out for Tata Elxsi, watch out for Trident. It's been on a consistent upward circuit for the last few days, and textiles anyways under in focus and in favor. So never know, Trident's numbers could well spurt the stock even more. Let's wait and watch. Among stocks that will react to news or results, first Tech Mahindra. They've purchased CTC and purchased stakes in these two other names as well. And Nomura says that all of this will bolster the digital engineering capabilities and the SaaS offerings of Tech Mahindra. But they say that based on their revenue growth assumptions of 20% over FY23 and 24, they find acquisitions to be marginally EPS accretive. They raised their 23-24 EPS marginally at that, and target price to about 2220. So that's on Tech Mahindra. Most people have maintained a neutral, by the way. So yes, an acquisition which helps them, but not really share price prediction accretive, if you will. Then some results, and why I say commodity chemical companies could be under focus. Tattwachintan Pharma, the raw material costs impact on EBITDA margins is the key thing. The revenues went up 33%, which is great. Look at what happened to EBITDA margins, 22% versus 31%. It's a really sharp dip. Could it impact the others, the Deepak Nitrites of the world, Tata Chemicals of the world? You got to ask yourself that. I'm not saying it will, but you got to ask yourself whether you got to be cautious on leverage trades into these names. Some of these are great companies to buy for the next multiple years, but in terms of a trade, you got to be careful if you're trading these. Again, I'm not saying all companies will face that. Some of the companies might weather it very well. China shutdowns might actually help them and help the commodity costs as well. So be just study them properly is the limited point I'm making. Tattwachintan Pharma PAT was just about 10% higher. So, and that too was supported by other income really. Maybe this stock is a negative reaction today. Tata Steel Long Products, the stock has run up ahead of what was believed to be a news item that will come out about Dilanchal Ispat. That's what market rumors tell me. But having run up 9%, the numbers needed to be delivered. The numbers haven't delivered. The point is, so there's increased raw material costs, lower other income, higher tax, all of these things hitting the net profit number 65%. Now, if it reacts negatively, you know why it's reacting negatively. People who track these very closely say that all of these were known. So maybe it may not react as negatively. Let's wait and watch. My suspicion is that it will probably have a start which is negative, but let's wait and watch. Angel One, really, this is Tata Steel Long, the last 3 days, okay, but otherwise has had a half decent performance as well. Let's wait and watch what happens to this stock today. Sorry, I stand corrected. I thought Tata Steel Long Products had run up ahead of this announcement. My bad. Excuse me for that. I must have seen a wrong chart. Angel One, the numbers look very solid. 94% revenue uptick, PAT up 126%. I haven't gotten down to the intricacies and the details of Angel One numbers as yet, but something tells me that they would have done well on most counts, which is what enabled them to report the kind of numbers that they have. So it's run up out of the numbers. This I'm sure of, but yeah, decent numbers. So let's see if it reacts more positively today. This puts ICICI Securities in focus today because those numbers come out today. We'll talk about them tomorrow morning at the same time, but watch out for ISEC. Some other stocks to monitor include Sonata Software, very strong revenue growth, but margins impacted QOQ. Pheniotex Chemicals, again, very strong revenue growth, but margins impacted YOY. and Bhansali Engineering and Polymers, wherein revenues were down 17%, EBITDA was down about 47%. So that stock left a bit to be desired. So never know, because the margins have gotten impacted for each of these. Maybe we see some reactions in them. We know what happened to HCL Tech yesterday because of poor margin performance. So not all the numbers look very good, but obviously the operational performance wasn't the strongest. So maybe it reacts negatively. Some other stocks in focus include a Prestige Estate Viewers, wherein the pre-sales numbers have looked very, very strong, and Ultratech, wherein while the numbers were very patchy, most brokerages have actually given a thumbs up to Ultratech numbers. So that's actually a very solid thing. So either the brokerages have maintained the target prices, or in certain cases like Investec, wherein they've raised the target price to 96.50, or Goldman has raised the target price, Citi has raised the target price. So those are a few which have raised the target price for Ultratech. So do watch out for that one, right here. So pretty interesting, the set of performance from some of the brokerages as well. This is brokerages on Ultratech. Lastly, CLSA's view on Devyani International. They say that they expect 4x EBITDA growth in FY21 to 24 due to aggressive network expansion, operating leverage benefits, and improving Pizza Hut store unit economics. They initiate coverage with an outperform rating with the target price of 207. Just before we wrap up, let's pull up, if we can, Virat, the stock price of Devyani International, just to put this into perspective, that while they expect a 4x EBITDA growth, they don't expect a 4x stock price performance on Devyani International, because some of this could have happened already. The stock is at 186, so marginal upsides on the target price. So do watch out for that. That's it on this leg of the trade setup. Have a safe, profitable day ahead. If you're stepping out, please stay masked up. Now I've seen front and center how quickly Omicron can hit when you exercise a lot of caution. So please be careful. I know I'm safe. I'm not COVID impacted as yet, touch wood, but at least in this round. But yeah, if you're stepping out, please stay masked up and do stay safe.